The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
And thank you for joining us here today on Market Talk. Happy to be here broadcasting live from day number 2 of the Farm Progress Show in Decatur, Illinois with our friends at Growmark FS. I'm your host, Jesse Allen. Excited here. We have a busy show lined up for you today. We're going to be talking commodity markets, everything that is going on. We've seen plenty of volatility and more. And we're going to be going through that today with some of the folks here from the Growmark FS team. Matt Bennett with agmarket.net's also going to be stopping by here. So jam-packed show on day number 2 of the Farm Progress Show in Decatur, Illinois. Thank you for joining us here today. Let's kick things off and dive right in. We saw corn, beans a little bit lower on Wednesday. So kind of quiet markets as we're getting set up for the long Labor Day holiday weekend. Joining us now, Cole Stock. He is with Western Grain Marketing. Cole, great to have you on Market Talk. How are you?
Hey, I'm good, man. It's good to be here. I'm excited.
Yeah.
Thanks for having me.
Thank you for joining me. So, we think about the markets the last couple of years here, Cole. What has influenced the markets at this point? The last 2 years or so, per se, for, historically higher corn, soy prices. Oh, yeah. It's made for a lot of volatility. It's made for fun markets, but it's made for frustrating markets, I think, as well.
Certainly. So you got to go back. We got to go back to fall of 2020, right?
Yeah.
We were walking into the marketplace. You remember 3 billion bushel carryout corn, sub $3. And then all of a sudden, when you come out of COVID, you see pent up demand, boom, hit the marketplace. And since fall of 20, we've been off to the races, really, and ever since then in the last 2.5 years on price.
Yeah.
So you throw in excellent demand, you throw in over the last 2 to 3 years, weather issues, South America, small weather issues in the United States, and demand stayed hot the last 2 to 3 years. So, the farmer's been faced with things that, they see every 2 out of 15 or 20 years, mm-hmm. right? Super inverted markets, high board, high basis levels, volatility, wide trading ranges the last couple years. So yeah, you hit the nail on the head. The volatility has been there,
and it can make it frustrating, I think, for folks with their marketing, or it could be an opportunity to reward themselves depending on how they manage their marketing plan. But now, as we look at where things are currently, right, and moving into this next marketing year, looking at new crop right now and beyond 24, etc. Things feel like they're changing a little bit, Cole.
No doubt, most definitely. And that's the message we've talked to our own customers about, going back to a year ago, wrapping up 2022. We told them, mm-hmm. hey, guys, you need to pay attention to D's 23 and Nov 23. We're seeing signs in the marketplace that demand could be slowing down. And if we're going to add a large South American crop, and we're looking at the prospects right now of a pretty good U.S. crop, that's when we're talking about, tying in with demand slowing down, getting back to historically lower price levels, right?
Yeah.
So starting back to the very start of this crop year, what's happened? So taking a look specifically at the corn complex, it's been on the demand side. Mm-hmm. Most notably the exports. I think we were a third for this marketing year, a third lower than where the USDA had us projected at on corn. Now, the one saving grace, you look at the rail markets, they were hot this whole past year.
Mm-hmm.
So what happened there? States west of the Mississippi, they more or less fumbled on corn production this past year with weather issues, right? Well, they're back in the market and looking at the prospects of a pretty good corn crop this year. So one thing we like to talk about at WGM, rather than price prediction of, hey, I think we're going here, or you need to make sales at this level. We like to look at where's your risk lie, right?
Sure.
Last 2 years, we've talked, hey, the risk versus higher versus lower, you've probably got more risk of prices working higher. Looking ahead towards this fall and next year, our message has been, hey, the risk is we're painting a picture of lower prices. Corn carryout specifically, we're sitting at that 15.3 billion bushel carryout number. You and I were talking before the show.
Very heavy number there.
Right. You got to go back to 2016 through 2019 were very, very similar years. And corn was more or less on either side of $4 going back to those years. Now, I'm certainly not predicting, hey, we're going to 4, but when we're looking at the balance sheets, looking ahead in the corn market, just specifically, we're, the USDA's got to get a handle of the crop size of the U.S., and we're going to need demand to pick up for next year as well.
So thinking about that, how can customers manage some of that risk and volatility here over the next few years ahead? What are some things in your mind that you're telling folks in those conversations that you're having, Cole?
Yeah, when we're talking about potential downside risk, and you got to remember, the 5 in front of corn, beans 13.50 to 14, those are still historically, those are pretty good price
solid
levels, right?
Right.
Yeah. So when we're talking about managing risk, sometimes you got to step out of your comfort zone a little bit. You look at buying that put option, locking in that floor of, well, hey, if the market goes higher, great, because all I'm out is the cost of buying that put. I can resell the grain at a higher level. Market goes down, great. It did exactly what I wanted it to. And you talk about looking ahead to next year, sometimes the best thing is just making the sale, right?
Yeah.
Because we're entering this year, customers, they're undersold, and I get it. Weather issues,
worries about whatever the case may be.
Right.
You don't have the crop, you can't deliver when it's time, that kind of thing. Those are all concerns I think I hear a lot as well, Cole. So it's managing through those and looking at, hey, what is my risk potential here? And there are a lot of different strategies out there. We were talking about this before the show. There's a lot of different things that you can do. It's working with someone like yourself to work through those things and find out what's best for your operation.
No doubt. And, one thing everybody likes to talk about, the last 2 years, everyone was a great marketer, right?
Sure.
And we're entering that marketplace where, it's similar to the years prior to kind of pre-COVID, the complex we could be looking at now. Saving grace, bean market, demand is showing to be excellent for next year. But again, the USDA and the whole market as a whole, we're going to have to get a better feel on what kind of crops out there and what does demand look like after the first few years we kind of walk our way forward here.
Real briefly, I know you're over by the river. How are things looking water levels as we're heading to fall? We've heard some chatter. Real quick, we got about 20 seconds
Well,
here.
it's going to be pretty difficult to be worse than last year. Last year's a record. September's looking pretty dry. So right now, traders are thinking that there's going to be, there's going to be flow on the river and barges will move and it won't be as bad as last year. But it's with the way the weather's shaking up and where the river levels are at currently, it is something to watch.
Awesome. Cole Stock, Western Grain Marketing. Cole, thanks for joining us here on Market Talk today. We'll be back with more from the Farm Progress Show here in Decatur, Illinois, right after this. And we continue here our live coverage at the Farm Progress Show, day number 2 in Decatur, Illinois. Jesse Allen back with you, and we continue Market Talk today with our friends under the Growmark FS umbrella. Joining me now, Scott Docherty with Western Grain Marketing and Aaron Curtis with MID-CO Commodities. Scott, Aaron, thank you both for joining me today on Market Talk. I hope you guys are doing well.
Yeah, thank you for the invite. You bet. Thanks, Jesse. Appreciate it.
Well, let's dive in and some of the things that Cole was talking about there in the first segment. I think this could be a good shift for us to think about basis and some of the things that we're going to be watching here as we get into this fall time frame. So maybe just to start, Aaron, what are you kind of expecting to see as far as basis levels as we go into fall harvest here just a few weeks?
Well, I think a couple things we're watching. First of all, it's just kind of the flow, especially when we look at Illinois. There was a big flow of grain last year to the west, and Scott can speak about that as well because that's near and dear to his organization. But obviously production in that Colorado, Kansas, Nebraska area was considerably less last year, so we saw a lot of grain leaving Illinois and heading in that direction, even down into that Texas, Mexico market. So I think that's going to be one of the bigger changes for basis this year. We're not going to see that pull coming out of Illinois and going to the west. So that's going to keep more grain back in Illinois and back to the river. The other thing we're watching here is barge freight again. Last year, barge freight traded to record high levels last fall due to the low water situation. We've got another situation similar to that this year. We're not seeing quite the levels barge freight that we saw a year ago, just because we don't have the demand that we've had in previous years for corn and soybeans. But that's one of the things we're watching to affect at least river basis, and that's going to kind of funnel out throughout Illinois as we continue to look forward, just because of that low water situation. Not a lot of rain in the forecast here as we move into September as well, so we expect barge freight to continue to be well supported. And then just to kind of funnel along with that, right, is just the fact that corn export program's been pretty poor moving forward. So just that pull that we would normally see in that fall time frame going down to the Gulf is just not going to be as robust as what we've seen in prior years.
Well, and Scott, maybe you can piggyback off of some of what he was saying as well from your perspective as you look at basis levels and more and some of the issues that Aaron spoke to. I mean, what's your mindset going into this fall?
Yeah, definitely. We're seeing the convergence between the old crop corn into the new crop, and week by week we're seeing that old crop basis come down to new crop values. As Aaron said, that we had a large demand for rail leaving the state of Illinois into Mexico Southwest, and so we're already seeing basis that are anywhere from 30 to 50 cents wider FOB values to us than we did a year ago. So that corn is going to stay locally and find another market. And what we're trying to do is define what is that other market. Is it going to be export? Is it going to be the domestic crusher? Where is that corn going to flow to from Illinois specifically in our marketplace? So from that standpoint, on the flip side of that, on basis, we're walking our way into this new crop year with a lot less ownership from our customers and producers. So from that standpoint, we had a probably double amount of fall contracts on the books a year ago versus what we were at today. So we're trying to, again, understand what is the farmer's mindset of what they're going to do once they get into the field and start taking the bushels out. Are they going to go to storage? Are they going to look at basis, cash sales? What's going to be the mindset from that farmer and demand for cash versus deferring income or storing grain?
Well, and I think that's a great point you bring up is I think a lot of our growers are maybe concerned about what they're going to have in the field possibly. And so they're thinking, okay, let me get it out of the field, put it in the bin, and then decide what I have in front of me. It feels like I'm starting to hear more and more of that just with the way the weather has been maybe. Aaron, are you hearing some of that?
Yeah, and transition years are always tough, right?
Yeah.
We went through this period since late 2020 where we had, $6 to $8 corn, and that was pretty easy to make a decision, right? You just go and sell it as soon as you got it. So as we move into this transition year where we're seeing bigger production in South America, prices are a couple dollars lower than we were a year ago. That's always a tough transition for the farmer to kind of readjust their sights and where they want to be. But I think to Scott's point, there just hasn't been a lot of opportunities in their minds, especially, we did see a rally in late June, but of course we were very dry at that point and hadn't rained for some time. So it was really hard for the farmer to pull the trigger at those more profitable levels. So I think at this point, it seems to be kind of a wait and see mode to see, what the yields are going to be in. And to be honest, right, farmer just doesn't need a lot of money right now either, right? Pretty flush on cash. So that also influences a lot of the decision making.
That is very, very true. And it feels like to that point too, with these corn, Novi beans, we're kind of hovering this 480 level and this, pushing back against 14 in November beans right now. And it just feels like this market is looking like it's going to trade sideways until we get through harvest and figure out what we have in the field, right? Right, Scott?
That's exactly right. Yeah, it's trying to source that demand versus too much. And so once we get into early harvest, we find out what the yields are really going to be, and the market will absorb that information. And from that standpoint, start. The key here is, are we going to buy any demand back as we get lower in price? And that's what the market function is trying to do right now. Yeah. Will we buy any demand on the lower price below $5 and below 13 in soybeans?
High prices cure high prices, low prices cure low prices.
Exactly.
Ration our demand. Balance sheets wise, and you guys have brought up demand here a couple times, and of course that's the other side of the coin. Because I feel like this market, we got hot and dry. we should be bullish, yet this demand's so poor that it's making us bearish and just evening things out. Soybeans, very tight balance sheet. What are your guys' thoughts of this soybean market right now? Does it feel like we could try to blow the top off 14 here if the yields aren't what they are anticipated to be? I mean, what are you guys hearing as far as harvest potential across the country right now?
Yeah, I think the yield's really going to be the determining factor right now, because when you're talking about 80 million acres, right, harvested, you're talking about 1 bushel an acre, tightens up the balance sheet pretty quickly. Right now, the USDA is in this 240, 250 million bushel. It sure feels like it could come down off of that a little bit if we pull this yield back closer to 50 or even slip under it a little bit. I still, just obviously bean yield still awfully hard to determine at this point, right? So I think we got to wait to see what's in it. But the South Americans crop, obviously record last year, still has a fairly long tail to it. They're going to be pretty active in the export space, looks like up through October. And then maybe we'll have a window there where we start to see some improved exports on the bean side. But I think when you look at the balance sheets, beans obviously have a lot more support underneath it than what corn would do, because even if we bring corn yield down a couple bushels an acre, I think we've still got plenty of room there to keep some pressure on the corn.
Yeah, it feels like corn, even if we get down to a 170 or right below that, it feels like it's going to take more than that to really get us to actually do something of note in this corn market, right? That's what it feels like, guys.
Right. Yeah, the indication from our producers is that they're going to use sell soybeans off the combine to generate some cash flow, either for nearby or for deferred, and then store corn from that standpoint. So they feel there's more potential storing corn at sub 5 than they don't want to store soybeans at $14.
Yeah. I know we have some winter wheat growers, obviously, here in Illinois, and this overall wheat market, such a global market. It's volatile. The Black Sea stuff is really weighing in. We've set some new lows in wheat, but I know, too, wheat has a bit of an influence over corn and beans right now on the broader picture, doesn't it?
Yeah, especially on the wheat versus corn, right? We said new contract lows this week in SEP and D Chicago wheat, right? There's just not a lot of good news in the wheat side. You flash forward back to a year and a half ago, right, when the Black Sea tensions really war started, right? When there was anticipation that it's going to be a big windfall for U.S. wheat, and it's just never materialized. Russia continues to control the wheat market on the global side, so they continue to offer wheat out at relatively cheap values compared to what the USDA or U.S. can compete with. So, wheat is definitely active as an anchor for corn just because of that competitive piece of it. But it's just going to be hard, I think, until we get into maybe some more growing season around the world before we can really find a bottom in here.
Well, Scott, Aaron, before we run out of time, either one of you have any final thoughts? Anything you would tell producers they're thinking about things here with their marketing, getting ready for fall harvest, etc.?
Well, as they walk their way into fall harvest, again, just taking a look at what their cash flow needs are going to be, and then also, try to develop a plan with a trusted advisor and look at some basis opportunities post-harvest. Also look at we're starting to build some carry in this corn market. So look at some of those carries, make sure that if you go to the marketplace, you try to take advantage of some of those carries, and then look for opportunities to sell some pops in the basis. So we walk our way out of the backside of harvest.
Fantastic.
Yeah, and I agree with Scott too as well, right? You got to continue to look at what it's going to cost to keep holding on to this corn and what interest costs are. So you got to consider that as well.
Fantastic. Scott Docherty, Western Grain Marketing, Aaron Curtis with MID-CO Commodities. Thank you both for joining me here on Market Talk today. Really appreciate it.
Thank you.
Appreciate it.
Coming up, we're going to talk FS Energy in a little bit, but first, Matt Bennett with agmarket.net will join us next here on Market Talk. And we continue here live from the Farm Progress Show, day number 2 in Decatur, Illinois. Another beautiful weather day, and happy to be here with our friends at Growmark FS in the FS lot. Stop by and see us here just off Central Avenue. Really a lot of great stuff they have going on. You can check in to cash in for the FFA as well. Really cool thing they have going on. So make sure you swing by if you're going to be here at the Farm Progress Show and say hi to the great folks here with the FS team. Joining me now, welcoming in our good friend of the show, Matt Bennett with agmarket.net. Matt, Matt, good to see you. Always fun to be at a Farm Progress show, isn't it?
Oh yeah, it's definitely a good time. It's a little different feel this year than what it was last year. Last year, I think prices were a little bit better, but you had some challenges, of course, of expensive inputs and things that were on producers' minds as well. So this year is kind of the opposite, where obviously corn prices, which is what most people want to talk about, aren't exactly rosy right now. But you do have a little bit of relief as far as the input side goes.
Yeah, that it helps out a little bit, but it makes things challenging. Some people have kind of floated the idea to me that, the way the markets are now, they've gotten a little bit quieter. They've come back down. And so some people have kind of maybe forgotten how to market in this environment because it's not volatile. I don't know if you've heard anything like that, but I've heard a little bit of that.
Well, I mean, whenever it's not volatile, typically the phones go quiet.
Yeah.
And so I think whenever you look at the way this market is set up, you got to ask yourself, okay, how much lower do you think we can go right now? Now, I would have told you 10 days ago, I thought we might make a run for 460 or even 450. But the heat that we had, I do think might have changed the game somewhat, whereas people maybe are a little more hesitant to push it to the downside. I think ultimately you've got to understand that you've probably done some damage. How much? I don't know. I don't know that you find it out on the September report. Yes, they're going to be in the field. I understand that. They've been in the field. But unless they're in the field since the heat, I guess I'm not totally sure that we're going to know the extent of it. So I do think you're going to have to get into the crop. You're going to have to get into corn, start harvesting. I think that you'll take a bushel or a bushel and a half off, USDA will, for September on corn. But I don't know that that's going to be all that's taken.
I don't think, and I don't know if that's enough either. It feels like it would have to be a more substantial chunk to really impact that corn balance sheet.
I mean, that's the thing. You can take me down to 171 or 2, and let's just say this: 172 and a half using the USDA's demand and using their carry-in still is $2 billion. It's push it right at $2 billion. And so, here's the thing, though, Jesse, their export number's too high. Right now, it just is. Until you prove me otherwise, it's too high. So if you would take us down to 171, there's still a decent likelihood that you're looking at a $2 billion crop. So taking 4 bushel off this thing, is not necessarily going to necessitate the kind of rally that we typically would expect with a 4 bushel drop. So you have to be a little bit cautious there. I do think that the heat probably brought us support. I just don't know that it's going to bring us any new buying by any means.
That's a very, very good point. Soybeans a bit tighter. Still some concerns about what's going on with the bean crop too, with that heat and dryness. But on the same token, this is kind of this balancing act we have right now. I feel like is we have a somewhat bullish weather scenario, but demand is just so bearish for corn and beans that kind of canceling each other out, Matt.
Yeah, I mean, so with beans, the thing is the Pro Farmer Tour had good pod counts everywhere, better pod counts than last year, other than Minnesota. And so, you got to ask, why in the world did they come out with a lower yield than last year? Well, it's because the fields that they were in, the condition of the field was excessively dry. And so pod counts are all fine and well. But as a producer, I do remember a couple of times in my career that I've pulled into a field that I would have thought was just going to be incredible beans, waist-high type beans, potted top to bottom. And then all of a sudden I start harvesting their 25, 30 bushel beans because they finished so terribly with no rain whatsoever. That's what the Pro Farmer Tour is a little bit concerned with. Ultimately, I think when it gets right down to it, this bean crop is not finishing the way I would like to see. I would have told you, Jesse, on August the 10th, that this crop is bigger than the USDA said August 1st because we got good rain.
Yeah.
The problem is you follow that up with the rest of the month drier and then hotter than a blowtorch, for several days in a row. And so I think that maybe whatever you gained, you probably lost that and then some. 50.9 is where they were at for August. I've got to think that you're going to stay above 50 maybe on this report, but I don't think that I do think they'll move a little bit lower.
So how do we manage this risk in this environment heading into harvest? And some folks maybe are a little concerned about what they have in the field and they have unpriced bushels maybe, or maybe they haven't done a whole lot of marketing for 23 or even thinking about 24 as well with some of the levels that we're at. Maybe you can speak to both, Matt. I mean, how do we manage this risk right now? How do we protect our downside? How do we be smart about it right now?
Well, let me take the easy questions first. So 24, Today's price still hanging on with $5 type corn, a little bit above, and fertilizer prices, you can make money. Okay. Now you're not going to make the kind of money you made in 21 and 22. Okay. So we just got to kind of get that out of our head, if you will, but you can still lock in a worst case scenario, buy your fertilizer, sell enough corn to pay for it. Last year it cost over 60 bushels to buy your fertilizer. Okay. That's how many bushels you had to sell to buy your fertilizer. This year it's sub 50. Okay. And so it's a different scenario. You can sell a little bit less corn than what you did before, and it's just locking in a worst case scenario. As far as beans are concerned, $13 plus beans, we know we can make money.
Yep.
At APH yields. Okay. So 23 is where it gets more complicated. Those people that bought fertilizer last year at Farm Progress Showtime and didn't sell corn, which anytime you're paying for high priced inputs, you need to sell some of the other side of the equation to lock in that ratio, to cover yourself. They open themselves up to a potentially bad situation. That's what we're looking at right now. So a lot of elevator folks will tell you that the producer is undersold compared to where they would like to see them at. So if I'm a producer that's undersold at this point, if it's corn, if I've got early premium somewhere, I'm going to chase it if I can make it work. As far as soybeans are concerned, it's going to be tough, I guess, to find producers that are going to lose money at $14 beans.
Yeah.
The real problem's corn.
Yeah.
The real problem is corn if you haven't sold enough corn yet, or if you're in a situation on soybeans where you have a drastically lower yield. Obviously, from a revenue standpoint, if the price is still hovering around your spring price, you're not going to get a whole lot of satisfaction there. As far as corn's concerned, if I've got a certain yield loss, Jesse, one thing I'm telling folks is if the corn market continues to dip, I want to step in and buy corn because I'm going to lock in my insurance revenue kickback, if you will, whatever they're going to pay me. If the market gets closer to 591, I lose money.
Yeah.
So if you've got a certain yield loss, you ought to be considering corn ownership in some way.
Well, now on the flip side, talk to me about cattle a little bit, because with cheaper corn prices, I feel like that's an opportunity to lock in some feed costs. And we're seeing, I know we set some new contract highs here just earlier this week in cattle. So, I mean, what's this cattle market looking like? Are you still somewhat bullish, or where are we at here, Matt?
I mean, yesterday you're still, you had April at 193.3, which is pushing the high we just set here not so long ago. So, I mean, whenever it comes to cattle, I still think when it boils right down to it, the only way you get to that magical $200 level that you and I have talked about many times, it's going to be when heifers are retained and put back out in the pasture. I have no issue with anybody selling a heifer for freaking $1,750 or $18, $19. I mean, they're making money, and so they're getting right on their balance sheet. They're getting right as far as their pastures have greened back up. They're getting healthy again, and I think once those gals go out to pasture, that's your chance for a blow-off top type situation. The cattle situation does not get fixed overnight. You're going to have a small herd for some time. Okay. But with that being said, I think when you do take this cattle market on that next leg higher, which I don't expect till maybe towards the end of the year, first quarter next year, I think when you do that, then you're probably looking at the market finally cooling off. We know that cattle market's cyclical, but yeah, you're right. You can buy cheap corn. If I was a cattle guy, I don't know that I'd buy it all just yet. Want to kind of wait and see how this thing plays out. I'm not bearish necessarily, but I don't want to buy it all right now. I like to do the same way I make my sales in increments.
Anything else on your mind right now as we're nearing the end of the month? I know heading into a long holiday weekend when we got some weather concerns, that could make for a choppy environment. We still got a lot of global issues, whether it be geopolitical wars, South America, etc. I mean, anything else standing out to you? Anything else you're hearing from folks here at the Farm Progress Show, questions that they have about the markets right now?
Yeah, I mean, I'd tell you my most asked question, but it's got nothing to do with the markets. So people keep asking me about my kitchen project at home because I write about that in my newsletter. But what I'm going to tell you is basis has been interesting to say the least.
Yeah,
and basis will be hot at the start because most systems are devoid of corn. There's just not much corn out there in the Midwest. The problem is once you start to get the system primed, I'm very wary of the fact that you're going to get a really good basis situation. I'm concerned if you need basis to do the work, I don't know that it's going to get the work's going to get done, I guess is what I'm trying to say. So, I think moving into harvest, you just have to be really cautious. how much money are we going to spend? We're not going to make near the money we made the last 2 years. We got to be smart about it. We're going to be borrowing money for probably 8-9% this next winter. And so with that being said, a producer that borrows, $500,000 is going to spend $25,000 more if they've got to borrow the whole year versus that 4% they were paying before. So we just need to be real smart about our purchases and what our liquidity is, because that stuff can creep up on you pretty quickly.
It definitely can. I know folks can find you and the team there online, agmarket.net. By the way, how much percentage-wise you done with the kitchen project? 20, 30?
It's probably 85.
85? That's even better than I thought. Matt Bennett with agmarket.net. Thanks for joining me here at the Farm Progress Show. Appreciate it. We're going to talk FS Energy coming up next here as we get ready to wrap up for the Farm Progress Show in Decatur, Illinois, here on Market Talk. Now here on the program, joining us now, pleased to have with us Shane Michaels, Energy Management Specialist with FS. Shane, great to talk with you. How are you?
I'm good. Thanks.
Yeah, beautiful weather here at the show. Really, really great stuff. And crowds have been good. I'm sure you've been busy talking to folks here in the FS lot.
Yes, sir. We've had a lot of people in here today. Seen some of my own customers.
Yeah, and that's always good to get that face-to-face with customers. So let's think about heading into fall harvest, locking in some of those inputs and more. A lot of important things that need to get done here ahead of rolling the combines in just a couple of weeks' time. And obviously fuel, I think, is a big, big component of that, making sure that you're stocked up, ready to go, and have a premium, high-quality fuel. So tell me a little bit more about Diesel X Gold from FS.
Diesel X Gold's got 8 components in it. It's got our detergency additive, our cetane improver, lubricity enhancers. We also got oxidation inhibitors, corrosion inhibitors in it, our demistifier, stabilizer, and it actually adds up to 5.7% fuel efficiency.
Yeah, and really it's your guys' gold standard, so to speak. Like that's when folks are coming to their local FS retailer and they say, hey, I need to get diesel fuel in my tank for this fall. You guys are saying, well, Diesel X Gold is what you want.
Exactly. I think you, like I said, you get your fuel efficiency, and I think your storage life's a lot better that way.
Talk about contracting options. What are some of the options that growers have in front of them? Maybe they haven't worked with FS in a while and they want to come back to you guys, or maybe they are a current customer and they want to talk about some different options. What options do they have as far as contracting?
Yeah, we contract fuel. You can contract your fuel for the spring, fall, summer. You can go out to 2 years on that. And then you know what your upfront cost is.
Yeah. Pretty standard, pretty easy. Yeah. How about as well, let's think about just what would you recommend to folks as they're getting ready for fall harvest? Is right now, heading into the Labor Day weekend, is now the time to fill up the fuel tanks and get everything ready ahead of rolling the combine? Should they wait a week or two? I mean, talk about that. What would you recommend?
Well, I myself, I've been filling guys up. I've been watching the markets a little bit. I been seeing them, drop a little bit last week, and just watching the markets. I think you need to fill them up now and be ready for harvest. Once harvest hits, you never know what the market's going to do, especially when a hurricane or anything like that comes involved.
Yeah, and we do have a hurricane going through right now in Florida. So it feels like, though, that the price, input prices right now are pretty solid. And it doesn't feel like they're going to fluctuate a whole lot here in the next couple of weeks. But still, to your point, get it locked in now so you don't have to worry about it, right?
I agree with you. Yes.
Yeah. Let's talk a little bit as well, just some general maintenance thoughts. And I know on top of great diesel fuel from FS, you guys have a lot of great oils and different lubricants. And I think as well, just a reminder, general maintenance heading into the fall. Make sure that you pull the combine out of the shed, check your oil, check your lubes, etc. A product like Super X Gold from FS, on the oil side, just feels like that, general common knowledge, but also a good reminder, right, Shane?
Yes, I think you should be getting everything filled up, all your oil, all your hydraulics. The Super X Gold, it meets and exceeds all manufacturer specs. We blend it actually in Council Bluffs, Iowa. We blend it, we back it.
Yeah. I know as well, too, you guys have some great benefits back to your customers as well on certain products, right, Shane?
Yes, just like your Gold Standard. If you're a Gold Standard customer, buying our Diesel X Gold and our Super X Gold, we give out like Gold Standard cards. You know, you may savings on a price at the pump, or you may have savings on your oil through the year. And also we have patronage. We paid back, 60 to 70 cents a gallon the last 3 years back on oil, and maybe 6 cents on your gas or your fuel.
I think that's a great part of just being with the FS family and being under a cooperative type system. A lot of great benefits back to our growers across the entire Midwest where you guys have locations, right, Shane?
Yes.
Well, anything else? Final thoughts? We got about a minute here. Just any other reminders or anything you would reiterate to folks as they're getting ready for harvest here, and they're looking and they may need to make a stop at their local FS location and talk to you guys and talk to the specialists there. Anything you would reiterate or add to mention to them as they're getting ready for fall harvest? Kind of the same things we were saying, right?
Exactly.
Yeah.
It just goes back to let's get topped off and let's make sure we have everything there for our maintenance and get ready to kick it off.
Awesome. Shane Michaels, Energy Management Specialist with FS. Thank you for joining me here on the show lot, the Farm Progress Show. We really appreciate it. Thanks for being on Market Talk.
I appreciate it. Thank you, Jesse.
Awesome. And as we are getting ready to wrap things up here today, beautiful weather for day number 2 of the show. And we are excited to continue for day number 3 of the Farm Progress Show here tomorrow. We'll be back with our friends at Agoro as well, so looking forward to that. But big thank you to the FS Growmark team for having us here today. Learn more online, fssystem.com. If you can't make it here to the show, hopefully you can, though, because you make sure to check in and to cash in for the FFA if you can make it here to the Farm Progress Show. That's going to do it for today's episode of Market Talk. I'm your host, Jesse Allen. Thanks so much for joining us. Have a fantastic rest of your day. We'll talk to you tomorrow.